For those new to investing, the stock market can seem like a complex and intimidating world filled with jargon and unfamiliar terms. However, understanding key stock market terms is essential to navigating the market successfully. Whether you are just starting to build your investment portfolio or you're planning to dive into trading, grasping the fundamental terminology will help you make informed decisions. In this video, we will cover the top 10 stock market terms every beginner must know. 1. Stock, or share. A stock, also known as a share or equity, represents ownership in a company. When you buy stock in a company, you're purchasing a small piece, or share, of that company. As a shareholder, you may be entitled to a portion of the company's profits, usually in the form of dividends. The value of the stock can fluctuate based on the company's performance, market conditions, and investor sentiment. 2. Dividend. A dividend is a payment made by a company to its shareholders from its profits. Not all companies pay dividends, but those that do typically provide regular payouts to investors. Dividends are usually paid on a quarterly basis, and they can provide a steady stream of income for investors. Dividend payments can also be reinvested to purchase more shares, increasing an investor's holdings over time. 3. Bull market. A bull market refers to a period in the stock market where prices are rising or are expected to rise. The term bull is used because bulls attack by thrusting their horns upward, symbolizing rising prices. During a bull market, investor confidence is generally high, and there is a sense of optimism in the economy. Bull markets can last for months or even years, and they often lead to higher stock prices across various sectors. 4. Bear market. A bear market is the opposite of a bull market. It is a market condition where stock prices are falling or are expected to fall. The term bear is used because bears swipe their paws downward, symbolizing declining prices. Bear markets can be triggered by economic downturns, negative corporate earnings, or broader global events. Typically, a bear market is defined as a 20% drop in a major index, such as the S&P 500, from its recent peak. 5. Market capitalization, market cap. Market capitalization, or market cap, is the total value of a company's outstanding shares of stock. It is calculated by multiplying the stock price by the number of shares outstanding. Market cap is often used to categorize companies into different sizes. Large cap. Companies with a market cap of over $10 billion. Mid cap. Companies with a market cap between $2 billion and $10 billion. Small cap. Companies with a market cap under $2 billion. Understanding market cap helps investors assess a company's size, growth potential, and risk profile. 6. Stock ticker. A stock ticker is a unique symbol used to represent a company's stock on the stock exchange. For example, Apple's stock ticker is AAPL, and Tesla's is TSLA. Tickers are used to quickly identify a stock on the market and are essential for anyone following or trading stocks. A stock ticker is usually composed of a combination of letters, and each exchange, like the NYSE or NASDAQ, has its own system for assigning tickers. 7. IPO, initial public offering. An initial public offering, IPO, is the process by which a private company becomes publicly traded by offering its shares for the first time to the public. Companies go public to raise capital for expansion, pay down debt, or provide an exit strategy for early investors. IPOs can be highly anticipated events, but they also come with risks, as a company's stock price may fluctuate significantly after it begins trading. 8. P/E ratio, price-to-earnings ratio. The price-to-earnings (P/E) ratio is a key valuation metric that compares a company's current share price to its earnings per share, EPS. The formula for the P/E ratio is P/E ratio equals stock price, earnings per share, EPS. P/E ratio equals earnings per share, EPS. Stock price. A high P/E ratio typically indicates that a stock is overvalued or that investors are expecting high growth in the future. A low P/E ratio might suggest that a stock is undervalued or that the company is struggling. The P/E ratio helps investors assess whether a stock is priced reasonably relative to its earnings. 9. Volume. Volume refers to the number of shares of a stock that are traded during a given period, such as a day. High trading volume typically indicates strong investor interest and can signal that a stock's price may move in response to news, earnings reports, or other factors. Conversely, low volume can indicate a lack of interest and may make it harder to execute large trades without impacting the stock's price. 10. Portfolio. A portfolio is a collection of all the investments held by an individual or institution. A well-balanced portfolio may include a mix of different asset types, such as stocks, bonds, and real estate, to help spread risk. The goal of a portfolio is to achieve a good return on investment while minimizing risk. Diversifying your portfolio by investing in different sectors, industries, and asset classes is an important strategy for reducing risk and enhancing long-term returns. The stock market can be a powerful tool for building wealth, but navigating it effectively requires an understanding of key terminology. Whether you're looking to invest in stocks for the first time or enhance your trading strategy, familiarizing yourself with terms like dividend, P/E ratio, and bull market will help you make informed decisions. Keep in mind that the stock market is dynamic, and it's important to stay educated and continue learning as you grow your investment portfolio. With the right knowledge, you can make smarter choices and become a more confident investor.